All right, traders, it is the 9th of September 2017. My name is Jameson. Let's do another video update here. So last time I did a quick update, I pointed out that I thought we were seeing some distribution. I identified this might be a preliminary supply. This is our buying climax. We can see the expansion of volumes, a lot of buyers here. It's a little climactic. Here's a buying climax, automatic reaction, which comes back and tests this preliminary supply. And then I thought we'd rally back up and have our secondary tests. I thought we would do so because if we're undergoing some distribution, if there's a lot of demand in an area within a trading range, generally we have to go back up and test it to ensure there's no more demand. Because if someone is actually distributing supply, you want to get that best price you can to sell your shares or your coins, into your ledger here, and before we mark down. But we didn't. So here's our automatic reaction. We had a secondary test. We trade back into this prior level resistance here. There was no demand. And then we broke down. There's a sign of weakness. We rally again. Last point of supply. Then here's a larger sign of weakness. So we break down with increased ease, a downward movement. We lose the lower trend line, the demand line of this bullish ascending channel, and we do so with expanding volume. And then we actually rally higher, and you can see that as we rally, there's still a lot of buyers that are here. So now we rally back up into the zone, retesting this prior level of support. Are we confirming this as resistance? We break back down. On this breakdown, we can see, look, there's no sellers. There's no weak hands. So let's rally back up. Let's test demand. And now as we rally and we test demand back into this trading range, back into the zone, back into resistance defined by the preliminary supply and automatic reaction levels, if you look into this level down here, look, there are no more buyers. If you look up here and then you correlate to the volume down here, it's actually contracting. There's less demand. And then what happens? If there's no demand, we have to drop and search for bids, and there's a lot of supply. So not only is there a lot of supply, the character at which that we break down and we close at lows here is very bearish. And we're looking at a chart since late July, early August. This is the highest amount of volume that is presented on the entire chart. So this looks very distributive. On the bullish side, though, if this is so bearish, and this is the highest amount of selling pressure that presented, why didn't prices break down, right? If supply is exceeding demand, it would be reflected with lower lows. And we can see that all this effort here did not break this low. So we have a scenario where there's big effort, no reward. There's effort, no reward. And that is some bullish absorption. So it stalls prices here. And now we rally back up into this, the prior high that's here. And at the present time, we're not seeing any buyers here. At the same time, we're not seeing any sellers. So you have to respect that we are seeing some distribution, but on this big surge here that didn't quite result in lower lows, we're seeing some bullish absorption. So I would not be surprised if we don't rally back up into the previous demand line, the lower trend line of this bullish ascending channel, and that we have to confirm this as resistance before prices break down. So right now, my bias is that we're seeing some distribution, but there's still some demand that's present. If you look at a daily time frame, so here's our daily chart here. We can see that as we rallied higher, we rallied into the upper trend line, the resistance line of the bullish ascending channel. We kind of create some overbought conditions, and we're just kind of now working off those overbought conditions through this lateral to lower trading. So looks very distributive, but on the daily time frame, it looks like at the present time it's nothing more than confirming this prior level resistance here as support. So you have to be cautious just blindly shorting what we're seeing here. You definitely want to have lower risk entries and maybe short the rallies up here. Where am I a buyer? Well, actually, if you look, it looks like we're starting to form a head and shoulders formation. If that's the case, and this is the neckline, you can just measure the top of the head down to the neckline, and then project that lower, and that would give you, your bearish target. Which at this time, grossly, I would say that an estimate would be this lower trend line, the demand line of the larger bullish ascending channel. Honestly, I wouldn't be a buyer until we retest this lower trend line here. So you can see we have two bullish ascending channels. One's defined by the dotted lines, and the next is actually the solid line. So I would consider entries along the dotted line here, and I would only do that if we see it's a contracting supply. I want to know that sellers are actually there's less weak hands and there's more strong hands, and then we'd rally back up. Otherwise, seems very bearish, but I would certainly be a buyer along the lower trend line, the demand line of this longer term bullish ascending channel that's here. All right, those are some quick thoughts. Good luck, traders.